Welcome once again to your favorite business analytical podcast, Broad Street Update with SCM Capital. With me is my favorite, you're my anchor guest right now because you are the one and only Jide Downsey,
Thank you very
Head
much.
of Research,
Thank you.
SCM
Capital. Thank you.
Welcome once again to this wonderful podcast. You gave us a lot of analytic last week. It was wonderful to see the markets move last week. This week, what has happened? Can you give us a run through of what has happened thus far for the week?
Okay, yes, the markets this week particularly had been on a backward trend. Okay, so we have a couple of profit taking and also markdowns because some of them that are paying dividend, they marked down. The likes of Surplus marked down, the likes of HBM, that was former Lafarge, also marked down. On a couple of that as well, did some markdown, which also reduced the share prices. Okay, so that also impacted on the overall ASI. All right. Aside from that as well, so a few other things also happened in the market that caused some investors. It is not about fundamentals. Last week I was saying that three key things determine the market.
Yes. You do.
Okay, which is the macro dynamics.
Yes.
And that fits into the financials and also some market developments as well. So all of those three things are still collaborative. They are still working hand in hand to strengthen the financial market, the equities market, and also the fixed income market as well. So we've not had any significant pressure on the market. Rather, it is one of those things when investors begin to balance their portfolio and see alternative investments that they can also do. We are house some of their gains and also look towards another environment where they can maximize the returns available. All right. Ahead of various other developments that they are projecting. Take, for example, the inflation rate is supposed to come out by Monday. All right. Investors will begin to build in their projections to what exactly is going to be the inflation reading. From the US, inflation stabilized to 3.4 in the US. What exactly is going to be that impacts in Nigeria? And how do we be able to look at other markets that will take advantage of the recent happenings in the macroeconomic space? All right. Also in the Nigerian political space as well, we talked about the political environment, pre-election season, which is starting very soon. And investors are also looking at what is the possibility of, or the chances of ABC in terms of the aspirants. So a couple of things have been responsible. All right. But in all of those things, the fundamentals of some of the companies listed, right, on the exchange is still very strong and the projection is still very bright, which gives opportunity for investors who can buy deep now and take up advantage of the price rally when it will be coming up as soon as possible.
Oh, fantastic. Thank you. Yes, you did mention that we should expect some profit taking. And so we saw it. I think I'm led now started thinking you might be some kind of a prophet on this market because you're really calling it and it's coming the way just like you've mentioned it. What's your take on based on this CBN policy? What's your take as it relates to the market? How do you think the market will react to it?
Okay, first of all, I think we need to understand the direction of the policy, right? Before now, okay, the CBN came up with a policy on Wednesday evening, all right? And the policy is categorically on three various levels. The first one is the standing lending facility, right? So what that means is that for banks who have liquidity challenge, all right, in the short term, they have the opportunity to approach the CBN window, all right, and take liquidity for their position within that particular space. All right. So what the CBN did before now was that to restrict that particular environment to the fact that the liquidity must only be for a specific assets or whatever. All right. But right now, what they are doing is to suspend that and say that you have an opportunity to approach that window when you have liquidity challenge or you want to use that particular liquidity for FX transactions or for treasury bills and bond purchase. All right. Before now, they can't be able to access that liquidity from that place to go and get FX or to go and buy treasury bills and the rest like that. But right now, what they are trying to do now is that there is money with the CBN. If you need liquidity, instead of running around at higher cost, you can approach the CBN at relatively lower cost and get that liquidity and be able to do some of your transactions. Okay. So how will that impact the financial market? Now it shows that instead of, for the banks majorly, instead of borrowing at higher cost, okay, the cost of funding would likely reduce. All right. So that's on one part of the banks. Then they will be able to play more in the FX market. So you begin to see the volume in the FX market instead of them being restricted before now, because they're out to look at their position, their financial position, their cash position before they can play in that particular environment. But right now, it means that the floodgates has been opened for them to be able to do that. All right. So they also have an opportunity to look at, okay, if I can borrow from CBN with the current treasury bill rate and the CBN rate, if I'm able to borrow from the CBN at lower cost, I can be able to play in the treasury bills market if the rates differentials is enough for me to cover. You don't understand? So CBN gives them that opportunity, and you will see more participation now in the treasury bills market because there's going to be a floodgates of liquidity, of buoyant liquidity coming into the treasury bills market. And the impact is going to be that the yield on the treasury bill will go further downward because of the demand in that space. As of Wednesday, the treasury bill auction demand was 4.4 trillion naira, whereas the offer size was just 700 billion naira. All right. So what it means now is that now that they can also still have an access to liquidity from the CBN, if they look at the yield differentials and see that they can be able to make some reasonable margin, they will have that funds and then get the treasury bills, whether at primaries or at secondary market. So that is what the CBN is trying to push to the system so that that money can actually be utilized. It's not just to buy the treasury bills. They can also access that funds at low prices and be able to also spread it around to private commercial papers and the rest like that. So it's just a bid to ensure that money flows away from the financial sector to the non-financial sector, to the real sector of the economy, so that there will be enough liquidity with the bank to be able to play around their customers. All right. So that is one side of it. Another side of it is the OMO auction, right? Now, the CBN policy also says that before now, it is only financial institutions, particularly the banks, that can buy OMO, all right? The banks and the FPIs, right? But right now, they'll be able to open that up and say that even individuals can now be able to buy OMO auctions. Individuals, high net worth individuals, non-financial institutions like the PFAs and the rest can begin to buy OMO auctions right now. So what it means is that the concentrations of other sectors aside from banks, all right, in OMO would expand now because everybody can now buy OMO. But the risk side of it is that it's going to fall back on the banks. Instead of depositing my money with the banks now, all right, at lower rates or 16%, 15%, I'll be able to go buy OMO at 20%.
Which
right?
makes more economic sense.
So the deposit side of the bank would reduce, right? Because they won't be able to attract more deposits as we speak, all right? Whereas for individuals, high net worth individuals, for asset managers like us, instead of placing the money at 15%, 16%, we can now place the money at 20% with OMO auction. And these are short-dated instruments that are highly liquid and risk-free as well. So you begin to see that dynamics changing in the environment, all right? So that is on the second side of that. Right.
Wow. Thank you very much. Thank you very much. Okay. You've heard it all on the CBN policy. These are some of the mouth-watering information you get every time you check out our podcast. Let's get into more touching information. Inflation. Inflation reports. What's the projection for inflation?
Okay, there are a couple of
vis-a-vis all of these things.
Okay, so there are a couple of things that affects or impacts inflation, all right? And that's why we have the headline inflation, the food inflation, the energy side of it, the core inflation too, and the FX side, all right? So in the last month, of course, the reading for last month's inflation should be coming out on Monday. All right. And with the projection, we're going to have a slight downward shift in the figure, because when you look at month on month, the Naira has strengthened against the United States dollar, which is one of the core input or impacts on inflation. The food prices as well had remained relatively stable, right? So you begin to also project that. The crude oil price as well had remained almost flat month on month, in spite of the challenges that we're having in the Middle East. So for us, as at the last reading in inflation, it was 15.91%. But if you build in some of these variables into the data as well, you'll be able to come out with the facts that even if there's not going to be a significant shift, right, you can be assured that there's going to be a slight downward movement in inflation. So month on month, I think we should be having 15.8, 15.9 within that range as well. And that is why you won't see, that is why investors are not taking their profit because of the pressure, because there's no inflation pressure as we speak. And going into the end of the year as well, all other things being equal, we will have inflation continue to moderate towards the CBN target of 15%.
Moderate towards CBN target of 15%. So do you see at any point this year Naira, because Femi Otedola said at the outset of this year that we are looking at Naira hitting the 1,200 to 1,200 benchmark.
Yes.
Do you think Naira will get there?
All right. So Naira can't be speculated as we speak, all right? The exchange rates before the various CBN policies, you can speculate, and that is what CBN had been able to guide against, okay?
Wow.
So, however, everything is possible, but there are some certain key variables that could move those things to be possible. First of all, Nigeria has most of its revenue from crude oil, right?
Yeah.
So, if crude oil production continues to increase, and the current price level of the crude crude oil is still sustained. So you can be rest assured that we'll have more dollar inflows, all right? And that would mean that more dollar is chasing the fewer available Nairas, which will up the value of the Naira. All right, so that is on one path of it. On the other part of it as well, aside from crude oil, our imports and exports balance as well is also very critical. We are approaching the harvest period now, which means that within the domestic environment, we should be having more food produced in the economy to be able to satisfy the economy and also take out instead of buying from outside and creating pressure on on our reserves. So that as well is also going to impact on the strength of the Naira. All right. This is also an electioneering period. Some of those things that will be used for packaging, for campaigns and the rest like that, are they going to be sourced domestically from domestic environments, or they're going to be sourced from overseas? All right. So when you build all of these things and you look at the directions of work at the campaign posters, the souvenirs and the rest like that, are they going to be from foreign or from within the local? So that will impact the value of the Naira. All right. And all other variables as well plugged into that. Nigeria is going to be accessing some funds from the international market, and that means that they are bringing in some dollars. All right. FPI increasing by the day. FDIs as well increasing by the day. They are bringing in their dollars. All right. And that is why we'll see that the Naira had remained firm within this period of time. So going into 1-2 may be a tall order in the next 4 or 5 months remaining in this year. However, all these policies of the CBN is also trying to narrow down on the pressure of the Naira on our local currency to be able to gain some international recognition in terms of the strength, right? In terms of the liquidity, in terms of the transparency in the market. And these are what investors want to see when they see that your economy is stable, your policies are supportive, all right? And all of these things will build interest into your market. So everything is possible, but
based on
you have to also be very strategic about that as well. So it's not a rocket science.
That's okay. Thank you. we are getting towards the Ember month.
Yeah.
We're also getting, like you mentioned, this is the political season. Politicians are known to spend a lot.
Yeah.
We know the craving for dollar has most likely be disincentivized to a large extent because, like someone once said, you would rather take Naira than dollar these days.
Yes.
Do you think any of these political activity, I know you touched base on it, but do you think if they really go aggressive and they spend a lot of money on this electionary campaign, would it not negatively impact the economy, or it is going to be positive for the economy? Because we are saying the local printers will have jobs to do. The woman selling umbrella will have things to sell.
Yeah.
Is it going to be, or we are also looking at the increase of Naira in circulation?
Okay.
No, I want just look into your crystal ball and tell us what you think.
All right. So on election campaigns and the rest like that, various activities that will build up around that side is also going to be helping the economy because you just mentioned printers will print more. Right. Yeah. And that is adding to GDP. All right. So if printers have jobs that they are going to deliver 1 million pieces of this, and before now they are using 5 staff. So definitely they will want to increase their staff to 8 or 10 because of the volume needed. And that means that unemployment rate goes down, production goes up, the GDP goes up. Okay. And it also means that more money for government because as their production goes up, their revenue goes up as well. Their PAT goes up as well. And again, of course, their tax. They will pay more tax as well. So it's also a plus for the economy. All right. However, I think the concentration should be on how would the politicians be sourcing, or in terms of what exactly, how would they be sourcing some of their souvenirs? Are they sourcing it locally, or are they sourcing it overseas? Right? If they are bringing it from overseas, it means that there's going to be a pressure on our Naira because they will need $1 to do that transactions. But most of the things that they will be sharing within this period, they'll be using within this period is domestic. All right. Mm-hmm. And one of the things I also recommend is that this is a data hedge. Right, where politicians begin to campaign online and the rest like that, and they rest more on data, which is local as well, and that's why the likes of MTN comes into play, right? As one of the recommendations I always give. All right, so in terms of the positive thing, I think we're going to be having some more positive side of that election. All right, the only negative side that we'll probably be seeing is the troubles, the challenges. Take, for example, what is happening in Osun State, okay? The this is that, meet this, beat, fight, and the rest like that. Those are the negative signs that we think could accompany this current electionary period, all right? But for the market, for the Naira, for liquidity, it's also good because there will be more money in the circulation. People will be able to spend more money. It could impact inflation on one side. But the CBN policy had been able to arrest that particular situation because once somebody gives you money, the next thing is for you to think of, oh, I need to buy X, Y, Z. All right. And that increases production. That increases inflation as well because of the demand on some of those things you'll be buying. All right. But the CBN policy at the moment is also has created that position to arrest any unforeseen circumstances that you think would impact on the overall economy. So for us, I am not skeptical about the fear. I'm not expressing any fears as regards the negative impacts that this electionary period could create on the Nigerian economy and the financial market. Right? I'm seeing some more positives than on the negative. And the reason I've given that before now, because the front line contenders, right, are those we already know before now, right? In 2023, they are also coming back as well. So aside from, we know them, we know what they can do, what they have done before, right? It's just that this is a new year, dynamics may change, fewer talks or change in some directions and the rest like that. But we know that in terms of policy direction, we already have a policy direction for the economy from all of them. So they are not really changing their manifestos. And that creates some transparency, some level of confidence in the Nigerian economy. All right.
Thank you. Thank you very much. So, on the final note, what's your recommendation for the market?
All right. Yes. This is an opportunity. I will always say, last week you were asking me, why am I bullish in the market?
Yes.
Until date, I'm still very bullish in the market.
Although the bears came out.
Of course, yes. Profit taking is part of the market.
Yes, of course. We agree.
You can't continue to drive on a smoother road without expecting a little bump or a traffic and the rest. So it is one of those things. But I always say that if there is no fundamental challenge to the financials, if there is no corporate governance challenge, all right, if there is no challenge in the economy, whatever happens, the market will always recover. It's just a matter of time. That's why we'll talk about asymmetry in financial market. The rate of fall, all right, and the rate of rise may be different, all right. However, if you get your valuations right and you know all of the parameters are right, the market will pick up, and you'll be surprised when it will pick up. So my recommendation is still strong in the market, and one of the reasons is because the recent CBN policy now favors the equities market more than the fixed income market. Why? Because they are opened the floodgate for people to come into the fixed income market, and as they come into the fixed income market, the yield at the fixed income market goes further downward. And when you look at the comparison and you say, okay, what can I get here? I just told you that 700 billion offer on Wednesday, all right, from the Treasury bill, whereas we have a subscription of 4.4 trillion. So when you take out that, you still have about 3.7 trillion on met bids. That goes to the secondary market to still go and wrestle for the limited available instruments in that Treasury bill secondary market, all right? And if they can't get, then they come back to the equities market. And if you're making a projection for the inflation rate to go forward or downward, you also understand that equities market will thrive better, because as the inflation rate goes further downwards, CBN begins to talk about easing. All right. And that easing favors the equities market as well. So this is an opportunity to buy the available yields that you can get at the fixed income market, because liquidity is going to move more into that as the CBN has opened that policy downward. All right. It's also an opportunity for you to take advantage in the the equities market, because those who are selling down now, profit taking, markdowns for dividends and the rest like that, these prices will recover. How much have they lost in the last? Some of them are just lost maybe 2%, 5%, 4%, and that is the dip. So you can't really say those are the significance, all right? So how many is 4%? By the time you recover in 2 weeks, 3 weeks, and the rest like that, you could double that, you could triple that, and the rest like. So it's an opportunity for you to buy now and buy low, all right? And then take an advantage of when the market will rise again, all right?
Thank you. Thank you very much. Thank you. It's been a wonderful time. It's always a pleasure having you in our studio, so that we can have this kind of insightful conversations and mouth-watering, I would rather say. As we come your way again, I remain your host, Dr. Temitope Akinwele, reporting for Broad Street Updates. You can always follow us on all our social media angle. It will be scrolling right there on your screen. And you can also give us a call on our phone numbers listed. We will be ready to take your calls and answer any of your requests. Thank you very much. With SCM Capital. Thank you.
Thank you.